It's another episode of NRG Insights. And for those of you that don't know, so we speak to people across the mortgage and protection world, whether that be broking, lending, marketing, or any kind of affiliate partners that can really make a difference and add some value and give their insights into the market. So today, I'm very pleased to have Matt Chapman from the Protection Coach. Thanks for joining me, Matt.
Thank you very much for having me, Marcus. Appreciate it.
That's all right, no problem at all. And this has been a long time coming because I've watched a lot of your stuff, and I think we've had people come on and talk about protection, that kind of thing. But I think I love the way you explain it as well. So it'd be really good to kind of delve into that. But firstly, talk to me about your kind of financial services journey, how you got to the Protection Coach and where you are now.
That's a superb question. It's really interesting, actually. So I started off working at a life insurance provider many moons ago. I'm not going to give away how old I am, but it was a long time ago. Came straight out of school and uni, started working there on a temporary basis, did a bit of a stint there. And then something really random happened. The wife and I moved to Spain for like a decade and just lived in Spain for 10 years and ended up running a cosmetics business. But it's like the financial service industry is like gravity, right? It seems to sort of pull you back in. We ended up coming back.
Pull me back.
It's true, isn't it? You can't seem to get away from it. What I'm worried about is all our kids are going to start getting into it soon. But yeah, no, we ended up living in Spain, and then we decided to come back because it was like the kids were at an age where they needed to come back and sort of get into secondary school. And the wife was like, oh, why don't we go and do some financial service stuff again? So we asked a lot of the friends that we were working with back, which was at the time, it was Britannic Assurance, which is now Phoenix Group. And they were like, oh, yeah, well, we're doing some contract work. And we're doing contract work in PPI. And I was just like, okay, cool. All right. So she came back over first and started working in the contract space. I then got asked to come back and do some work as well. And ended up getting involved in a remediation project at Nationwide. And I was doing like kind of senior ops stuff, but it was really interesting. So what that experience taught me that was fascinating was where the insurance sales process can go horribly wrong, both in terms of clients' expectations, bad outcomes.
I'm assuming you were on the gamekeeper side of the PPI thing. So you were working with the banks to sort of, or your wife was working with the banks to
very much. So we were doing the contract work, investigating the complaints, and I had a number of teams, you know, from calculations to investigations. We were doing
that was a decent gig.
Yeah, it was really
that was a good gig for a while, wasn't it?
Yeah, do you know what? It was great. Good money, interesting thing to get involved in. What was funny was some of the investigators were the same people that missold it. Yeah, so I was like, that's cheeky.
One of my very close friends, like I was an usher at his wedding type close. He won't admit this. Has made millions and millions from the PPI scandal that they sold. They're poached on gamekeeper, and now the guy owns a mortgage brokerage again. And I think, would I give you a license? But, you know, to be fair to this guy, right, he played it really well in the sense that he put all his money where his mouth is, all his own personal wealth before it went to the high courts. So he'd sort of built a great business, but it wasn't making any money until the high court said, yeah, actually, you're in the right. So they were so far in front of everyone else. I think they're in one of the biggest 3 PPI companies in the country. So he's made a fortune, but it always makes me laugh. He refuses to go, no, we didn't sell PPI. I'm like, oh, you did.
But can I just say something there?
Anyway, sorry.
No, it's cool, man. It's really interesting stuff. I think the biggest misconception of what I learned there, ignoring all the complaints side of things and how things go wrong and what good outcomes and bad outcomes look like, was this idea actually that PPI itself, there was nothing wrong with the product. And I think people forget this. There was nothing wrong with the product. It was perfectly valid. It was perfectly viable. And for a lot of the people that had it, it provided a lot of benefit. I was doing investigations and looking at people who were complaining about being missold PPI, yet they claimed on it 3 times. They'd been paying their mortgage for them. And you're kind of going, but what was interesting though, was we were upholding the complaints because it was the sales process that was flawed, not the product. And I guess what that taught me was insurances are really valuable when people need them. And it's all about how you go about selling it. So you can almost see like there's the DNA of where I've ended up, right? So we left that anyway to join a mortgage brokerage over here in Solihull. And it was a really interesting experience because the wife was originally doing the mortgages. And then she asked me to come in and said, I think you'd be really good at doing the insurance side of it, doing the protection side of it. She brought me in and I won't lie, I hated it. I absolutely hated it because the processes and the methodologies and the other advisor that I was working with, it just didn't gel with my way of wanting to work. I found it a bit, I was kind of getting the alarm bells based on what I'd just been doing. And I was kind of going, this doesn't feel the right way. Don't get me wrong, there was nothing wrong with them. They were a great firm, but it didn't sit comfortably with me. So I started trying to do my own way of doing things. And that worked really, really well after a while. Then I started to really enjoy it, and I was like, hold on a minute, this is actually really nice. It's not as unpleasant as everyone makes it out to be. There's this huge stigma in the industry that insurance is really bad and it's not nice, and I don't like selling it. And I'm like, what I do is I advise on a mortgage and I sell protection, and this whole kind of mindset issue. Yeah. So I started doing it the way that I would want to do it. And you know what? It was absolutely smashing. It did really well, won a load of awards. We set up our own practice. And then it was really, this all kind of changed at the start of lockdown. I remember there was Vicky Jensen from Primis, who was one of the sales directors at the time, really good friend of mine. And she said, look, you perform so well in IP, you outperform some of these big companies, and you're only like a small outfit. She said, when we get into lockdown, they were like, we're doing these speaker series for Primis to all the firms. Would you be interested in coming to speak to them? I know Richard Colson would love to have you there. And Richard Colson said, yeah, bring Matt in, get him to speak about how he does it. I did this presentation around how I did income protection sales alongside a mortgage, and people's heads were like just like blown. And I didn't get it. For me, it was like common sense. It's like, well, surely that's how you do things, right? But I hadn't realised that a lot of these people were stigmatised. They've got these kind of old methodologies and these ways of doing things. They've learned bad habits and whatever. And it was just like, oh, that's really interesting. So it kind of blew up from then. And I ended up doing some posts on social media that went viral. There was one where I'd related income protection to furlough at the height of it, and everyone was like, oh, that's a really incredible recommendation.
That makes sense. Yeah.
And it was really funny, right? Because I was predominantly doing all these videos and all these posts directed at consumers because I was trying to win business for my own company, right? What I hadn't realised was in the background, I was gaining a huge following from mortgage advisors who were going, I really like how this guy's positioning protection. I could take a few tips from him and do it myself. And what's happening is I started to see all these posts that were mirror images of what I was doing. And I was going, this is interesting. And it was really...
How did it feel at the time? How did it feel? Because I speak to people with the plagiarism thing. I don't care.
I don't give a crap about that. I'm not going to lie. Honestly...
Imagine it's frustrating if they're taking business from you.
No, do you know what, mate?
It's just the first,
Can I be honest?
Can
I be really honest? There is more than enough business for everyone. Mate, we have a protection gap that is so huge. Yeah. Even if I wanted to, I couldn't cater to everyone that needs it. So I genuinely, I've never thought that way. I just don't think that's right. I actually think the opposite, which is a rising tide raises all ships. As in, the more people that are talking protection, the more people that are doing it, the more it's normalised, the easier it becomes for everybody in the industry to do it, right? I just don't have that. It's like, it's not feast or famine. It's like we can all help each other, right? So I didn't have a problem with it because I generally think, and this is going to sound really cliche, and I'm sorry to say this, but I do believe this. I'm a little bit evangelical about protection. I believe in it so passionately that if it just results in one more person or one more family being protected, who cares, mate? Genuinely, who gives a shit? Excuse my language, but it's true. So I wasn't really bothered, mate. I wasn't bothered about the plagiarism. I actually found it quite flattering, if I'm honest with you. It was kind of cool. And then one thing led to another, and it was really at a point when I'd met Ash Borland a few times previously. Top bloke, really, really smart guy. And I was chatting to him once, and he said, Matt, you're missing an absolute trick here. He said, I know you've done a couple of training courses, which I did do. I've done a couple of business protection training courses, a few other things. Yeah. And then he sort of said to me, you don't realise that your predominant following is mortgage brokers and wealth advisors. And I looked, and on my LinkedIn, I've got about 4,000 followers who are all like mortgage brokers. And I was just like, okay. And he said,
they're not buying protection from you, Matt. They're not buying protection.
100%, mate. And he said, but they do hang on every word you say about protection. He said, so what you really ought to be doing, Matt, is just pivoting and start like a coaching program, helping advisors to have these better conversations. If it's something you believe in, why not do it? And I was just like, you know what, cool. All right. So I started the protection coach October, November 22, put a post out there saying that I didn't even use Instagram at the time. So I started an Instagram thing. And mate, I had like 37 discovery calls in the first week.
Did you really? Just goes to show how shit the process was. Like how the gap in the market, how they needed people like you.
It's frightening, mate. Absolutely frightening. And it does. It's a real sad indictment with regards to how the industry views protection as something that should be supported, and training and development should be around. And it kind of just really, like, it was a bit shocking, but it's kind of gone like that. It's kind of scaled up really, really, really quite interesting.
I imagine with Consumer Duty, people actually had to go, look, this isn't a thing that you have to look at, or it's a nicety. Your business is going to get fined if you don't do it. I imagine that's quite a nice plug for you.
The timing was quite helpful, I won't lie. The FCA helped me out a little bit, I'm not going to lie. But actually, do you know what, mate? It was one of those really interesting things that, yes, consumer duty was important, but I do believe that the majority of brokers, the majority of advisors do want to do right by their clients.
Yeah.
They're either just too busy, they don't know how to do it, no one's shown them a better way of doing it, they're fearful of rejection, they don't like those types of conversations. And so I'm kind of this little antidote to that problem, because I'm giving them nice ways to do it, ways that don't necessarily take away from what they're doing already, ways that embellish the advised process, ways that they feel more comfortable doing it. And so naturally they're more drawn to it, because it's not like, well, go and have a horrible sales conversation and flog something you think the client doesn't want. And so rebuilding that.
They need it. I just think it is. Well, we talked about this off air, but I think it is a slightly different skill set when it comes to talking about. I know it's a mindset issue as well, that they have to get out of that. Like I call it, wedding photographer, funeral director, but it still is. It's a different conversation, isn't it?
It is and it isn't. It is in the traditional sense, in that how we perceive it to be a different conversation. But I'll give you a prime example. So part of the coaching methodology I use is let's focus on what actually really matters to the client, because the only way to produce a good outcome for anyone is to give them what they want. And we talked about this offline. You kind of, mortgage advisors go, oh, client came to me for a mortgage, they didn't come to me for protection. So that's their idea. It's a different conversation. And it's like we said, well, no, they didn't, did they? They came to you because they want to buy or keep a home, right? It's nothing to do with the mortgage. If they had the cash, they wouldn't come to you. They wouldn't waste the money. So actually what this is about is recognizing, well, what's the client really hoping to achieve here? And then how do we use the products that we have in our toolkit to go and help them do it? Now that might include a mortgage, because they need to leverage the money to go and get it. But how do you get a mortgage? Well, you leverage someone's income sources and the deposit they've accumulated to go and get money from the bank. Well, hold on a minute. If they haven't got an income, would you even have a meeting with the client? If someone phoned you up and said, hi, I'd like to get a mortgage. Okay, well, what do you earn? Nothing. Thanks, mate. No thanks. So the whole idea there is linking it, connecting the dots and going, actually, it isn't a different conversation, because you're either a mortgage and protection advisor or you're not. And you advise on both. And I use this all the time. I say to people, mortgage advisors really undervalue what they do. They really think they're just some sort of like lower end of the market, fast paced, cheap and cheerful. We just give mortgage advice. All we're doing is arranging debts for people. They don't see it as something valuable, but it's inherently valuable to people because it's helping them to achieve their life goals. Own a home, do this, do that.
I had this conversation the other day about we take for granted the impact we have on people's lives. Like we find people their job and our clients find people their house. These are the two biggest decisions you make in your life apart from who you spend your life with. And then we just like, we're just, like we're scumbag recruiters, you're scumbag mortgage brokers or whatever. Like,
isn't it weird?
There should be a level of gratitude. Yeah, we don't do it in other countries, It's very British. It's very British to look at what we do. And
self-deprecation, we do it very well. We do it better than anyone, though, I should say that. We do it really well. But you are right, mate.
We're a really important part of a really big part of people's lives. And we kind of, one, don't take it for granted, and two, do the best you possibly can, because it's a really important part of someone's life.
Value yourself and value the advice you're giving. I use this example all the time. Like you'd never go into a doctor's surgery and ask them for advice around a medical ailment, then them turn around and prescribe something to you. The doctor doesn't think for a second, well, they're not going to follow the treatment course. They just instantly assume you're going to do what they tell them because they believe in the power of what they're saying to you. We're no different, but we've got to get into that mindset of, well, hold on a minute. If we're giving advice to someone, they actually value it as long as we value it. So if you act like it's important, if you act assumptively, if you talk with confidence and conviction, clients will take you up on your advice. And if that is, look, we're going to get you a mortgage, but before we worry about that, we're using your income to get you this mortgage. Talk to me about how sustainable this income is, because you need this to be in place for at least 360 months. So how sustainable is it? Well, it's not. Right. Well, in that case, let's ring fence that, because that's what we're using to borrow and that you use to pay all your bills and all this other stuff. And clients are very receptive when you do it that way. And I think the point you're trying to make, Marcus, forgive me, I'm reading between the lines here, is that the issue is with most brokers is they do see it like a step change. Like, well, clients come to me for the mortgage. I'm having a wonderful conversation around getting them debt.
Happy.
And then I'm going to have a very uncomfortable conversation around insurances that stop them from being in debt. Okay, cool. All right, I see it. Mm-hmm.
Yeah. No, that does make sense. It's an interesting. You're right. I always liken it to the two different conversations, but you're absolutely right. It should be being protected. But then I'm a big believer in, and this may not fit in with the way you do business, but I quite like protection-only consultants as well.
Yeah, massively.
Because I think they're just really thorough. They're really thorough, and I think these guys that are penetrating at like 10, 15%, and they won't give up you're doing the wrong thing by the client. Not giving that up is doing the wrong
100%.
thing. When you've got
Do you know,
someone penetrating at 80, 90, higher premiums and higher, getting the people what they want. I know the premium isn't relative, but it is because it means that they're getting the right cover, as opposed to how much money you're making,
you're so right. And I think that's touching on what you're trying to say with your argument, which is this different. It is inherently a slightly different skill set, right? And the reason it's a different skill set is because there is a perception that the client wants the mortgage, right? So naturally you're going, oh, well, I'm essentially taking an order, whereas we have to sell the concept of protection somehow. So I get that. I do get that.
Yeah.
And I think you are right in that protection exclusive advisors, protection only advisors, they are very skilled. And I think mortgage advisors who don't want to do protection or are not comfortable doing protection should partner with one and should refer it. I've always heard Settle Meta. He always used to say, he's formerly Openwork, now at AIG, he always used to say, write it or refer it. And I love that expression because it's a case of, look, no one's saying you can't write it. No one's saying you can't, exactly. But at least if you're not going to, give the customer the chance to have a good outcome, because overcome your own bias and your own prejudices and just get that client the right referral. And if you want to do it, I often do tips on this sort of stuff, but fundamentally just say, look, this is the bit that I can help you with. But as part of this conversation, we're going to have a very quick conversation around your financial resilience. And if there's a few gaps in your cover, what I'll do is I'll refer you on to one of our colleagues who deals with financial resilience, and they'll make sure you've got all the essential insurances you need. Now, just that phrase, you can hand it off. It's prepped the right way. Customer goes over, your protection only guy can do it properly. And do you know what? I think that's a great journey for the customer. It feels nicer, right?
Do you know what is really, you touched on there, is really important? It's about prepping them for it. Why people start talking about protection when their mortgage is completed is nuts, isn't it?
Expectation management.
Next week, yeah, exactly. Yeah. So like it should be. I mean, you're obviously the expert on it, but it should be mentioned 2 or 3 times, shouldn't it, during the process? During like, don't forget, we still got to cover this. This is still part of it. We still got to go through.
There are so many touch points. Yeah. I mean,
how many touch points do you think, actually, as a professional trainer, how many touch points do you recommend people have about protection before they actually get to the end of the mortgage?
Well, when I coach advisors, I encourage them to either submit the protection at the same time as the mortgage or before the mortgage. Because the reality of it is, how can you safely submit a mortgage application to a lender stating that you genuinely believe the customer has the financial capability to obtain and maintain that liability without first making sure they can? That, just saying.
Yeah.
And then realistically, the danger of what you're saying there is, and you are spot on, by the way, the danger of leaving it too late is at the point when the client's got what they want from you, there is absolutely no imperative to act, right? There's none, because you've given them what they want. And if it was that important, you'd have brought it up sooner. That's the client's mindset.
Do you know what I like? Yesterday, right? Did my driving test. Passed my test first time. He's just parked up. And then he tried to sell me this motorway driving lesson.
Too late.
I was never going to buy that. It was just way too late. I just passed my test. I didn't give a shit. I was like, oh, fine, I can drive. And he's like, but this is better. And I'm nodding at him thinking, exactly, not interested at all. And I liken it to that with insurance. Once someone's going, they're not listening to you because they've gone, house, I've got a house.
And do you know what's really interesting? There's a very weird psychological thing that happens, Marcus, when you leave it later and you bring it later, which is because you never spoke about it before and the client wasn't expecting to have that conversation, they get immediate persuasion resistance because they think that you're selling them something that they didn't need. Otherwise, you would have told them about it before. And so naturally, it makes it really hard for them. So from a touch point of view, I often say it should be discussed at IDD. So you know what happens when most brokers go through their IDD with the customer explaining the services they offer, they will gloss over the insurances bit. Whereas what they should say is, right, this is a really crucial part of what we're going to talk about, right? So yes, of course, we're going to talk about the mortgage, but financial resilience is essential. We are going to be looking, because the regulator mandates that we have these conversations with you because we have to protect you from foreseeable harm in a post-COVID world. We are going to be having this conversation. And if we identify that there's any gaps, we were going to be put in place things that are going to make sure you're financially resilient. So you say it there and then at the IDD before you even get there. Then you bring it up at affordability. When you tell someone some good news, oh, by the way, I think you can borrow £250,000. That's followed by, well, hold on a minute. This is based on a number of assumptions. Your income stays where it is. Your deposit stays where it is. So then you have a conversation around those items and how ring fenced they are. Then you bring it up as you're going through. So when you give them an ESIS document and you get to the bit where you go X many months at £942.58, or how many months? Do you remember we talked about the importance of making sure you're getting income? There's a reminder of why it's important. Then you get to the budget planner and you go through the budget planner. Well, there's your money in, there's your money out. If we remove this income line, what does that mean? You know, if you died and your partner's got, she's not going to be able to cope. So the budget planner, mate, that is like a gold mine to me. A budget planner is like the broker's best friend. Most brokers look at a budget planner like a box ticking exercise.
Yeah.
Do you know what I mean? And it's not.
The customer can look at it.
Remove an income line, take it out, or you're left with that. Those are your bills. And what's really funny, mate, I love this one as well. When brokers talk about things like, well, the client budget towards protection, whatever sits in the surplus income line is your budget to play with for protection. Whatever, because it's protecting everything above it, right? It's just, honestly, anyway, it is what it is, mate. I just love, I love this sort of stuff because I love to challenge preconceived ideas because unfortunately, and it's not, by the way, I do not blame advisors. I don't blame advisors. I blame the industry. And the reason I do that is because it's not that advisors don't want to do things properly. It's just that no one's ever showed them a different way. No one's ever said, you can do that, you can say that, or why not do this? Or here's a really easy way to do it. And so that's why I've done the protection coach, because I'm trying to offer tips to people and ideas that they go, yeah, do you know what? I feel like I could actually say that to a customer. Like that feels nicer. Like saying financial resilience is much nicer than saying insurances, right? And it's just changing.
You know what? You said financial resilience twice, and both times I've written it down twice because I'm an idiot. But I just think it's such a good saying, isn't it? Like we just want to make sure that you can get through this. That's all it is. And
it's
also on the timing thing, and the timing side of things is you always get this from brokers. Well, I would say more protection if I had more time, but because it's in the process, it's not like you're having to find some time at the end of it because you've already included it.
And do you know what's really ironic about this, Marcus? Right, it's embedded into the process, so it's threaded through the whole process. They're more likely to convert on it because they're bringing it up at the right time in the right way, so the clients can be more receptive and more accepting of it. They do it in assumptive ways, so it just goes through. They earn more money up front, right? And then what happens is then they don't need to take on as many mortgage cases. So suddenly the whole world just feels a bit more relaxed and a bit better, doesn't it? They're not churning through cases to try and make their ends meet.
This is the churn issue, right? Because we've obviously got like the big, horrible brokers, the big life insurance brokers who just bang out these £6 deals all day long, every day, and then it gets rebroked and that kind of thing. And people have that kind of image of someone phoning up and clawback, right? Clawback is a big thing for people. However, if you speak to really good protection guys, they're not getting a lot of clawback because they're selling it properly. If you're mis-selling it, you're going to get clawback. But
mate, it's sold on relationships.
You're taking on a debt.
Right, so price is always a problem when you've not added any value. Yeah, so value always trumps cost. So if you're having a conversation with a customer where you're adding a lot of value, you're explaining why you're doing what you're doing, you're giving them, the embedded advice process, they will take whatever you recommend and they won't cancel it because they have a relationship with you. It's no different to the mortgage. You wouldn't expect the client to go and get a different mortgage broker if you're doing your job properly. There's no difference. There's literally no difference. But the ironic thing is, mate, most mortgage brokers will do the protection, and then not speak to the customer again until the mortgage products come to an end. And that could be 5 years. And you're going, well, of course you're going to get a bloody clawback. Because the client wants to be treated like a customer. They want to be given annual reviews. They want to make sure they're not paying more than they need to. They want to make sure it still remains fit for purpose. Here's the ironic thing. I've found that when I've gone back to my customers and done annual reviews, I've seen a 37% uplift in protection penetration just for doing annual reviews. Because clients want to have these conversations. They want you to work with them. And think about what can change in a year. Someone's had a baby, someone's got married, someone's borrowed some more money, someone's got a new car on finance. There could be all these additional things that they're going to need help and protection with. They may be earning more money. They may have a different job. They may have different workplace benefits. They might have lost workplace benefits. So this is all about having that regular client touch point so that you keep at the forefront of their mind. You provide that ongoing service. Not only is it more consumer duty compliant, but you'll create loads of opportunities off it as well.
Do you know what's really interesting about that touch point side of things and actually treating someone like a broker? Every single podcast I do, when we talk about the best people at selling mortgages, the best people at selling insurance, or the great people in the industry, one is relationship management, which is exactly that, those touch points. But the other side of it is that keeping in contact side of things. The actual, treating them like a customer all the time. That non-transactional stuff. I still speak to brokers who are buying leads 10 years in, and I think, Come on, man. Do you know what? If you had just
All on the
send them a,
front, falling off the back.
exactly. Send them a birthday card, man. You'd never have to buy a lead again in your life.
It's
But
madness.
they don't, do they? They just it's so transactional, and then they're also the ones that we can't help because they'll never change. Then I mean, you might think that's wrong. You might speak to people who you kind of changed their mindset that have done years and years of the same thing. But if they can't see it by now, the transactional market is dead.
Yeah.
Can you
The
really
world's
teach
changed, hasn't it, mate? Customer expectations have changed. The world's changed. And I think that's why the way I'm doing things resonates better with people, because I'm teaching them you don't have to go in there with these kind of like fairly aggressive old school sales tactics. This is about genuinely talking to people. We've been in some ways, and I don't mean to downplay the impact of COVID for a lot of people, but in some ways it was a very positive thing for the industry in that what it did was it highlighted how financially vulnerable we are. Okay. And it was a
we were
shared
aware of our
experience.
mortality as well, weren't we? We're just
Does that make sense? So we had this really interesting shared experience that has opened up a lot of doors for advisors to have proper, meaningful conversations around things like protection. And what's happening is those advisors who are embracing that opportunity and using this as a platform to go and have these conversations with the customers are doing better than those that don't. And that's really simple. I mean, we did mention this offline. It's going to be really interesting to see, isn't it? So we've seen a huge uptake in protection. So I also do a lot of work with the IPTF. And at the Income Protection Task Force, we've seen significant increases in income protection penetration from the advice community. Yeah, interesting. So there's a lot of emphasis and focus on protection as mortgage brokers are looking at additional ways to earn revenue and to cover some of these shortfalls that they've got from their mortgage volumes. The question's going to be, when things pick back up again, are people going to retain that level of focus, or are they just going to get back to being busy fools, so to speak?
I honestly don't think they will, and I mean that. I don't mean that disrespectful. All of my clients are brokers and lenders, etc. I think when the market gets easier, we lose. We constantly talk about the moment, sharpening our tools, and I might be the same. I might be in the same boat. We've had such a tough time that we've put our processes in place that everything we do now is incredible because we have to get every lead to within an inch of its life. But when it gets easy, am I going to notice that stuff? Do you know what I mean?
Yeah.
You naturally slip off the edge. I think it's so important to remind ourselves of how hard it's been. But it's really hard to remind yourself. There's a reason why women have more than one child. They forget about how hard childbirth is. Because if you remember, if it was constant in your mind, you'd never have another kid, would you? I know I've never had one, obviously, but I've had wives who have had.
That's a great analogy. That is. It's so true. I've had 4, but what's wrong with me?
I've had 4. I'm fine. But you genuinely, though, you just forget the pain, I think. If there was a way of like someone could stab 2023 into me every year when the market picks up, then it would help me keep my tools sharpened. But how do you combat that?
I think what it is, though, Marcus, I think what it is that's going to separate the advisors that do continue to do things properly and those that don't, and this is kind of where I'm coming from with the protection coaches. What I try and teach in the protection coach is sustainable practices. So there's no point in going in and having a really great sales presentation and going, oh, I like the sound of that, if what you're teaching these people cannot be replicated and consistently sustained, right? So everything I talk about, like I talk about the embedded advice process and how and when to bring it up in the language, is all because I know those are things that most brokers will happily adopt into their processes and change forever. Well,
that's what I was going to say. But where it's not 2 separate conversations, you can't really drop it out. You can't be lazy and drop it out because, like you say, it's embedded in. So it's different when you've double parked it. It's easy to not do it, but actually, like you say, you're not going to just. There's 3 lines you've been using for the last 2 years, and you're not going to say them anymore because you're doing all right. Do you know what I mean?
Exactly.
It's always going to be part of your process again, isn't it? But that's smart.
And when people see the success from it as well, it's very hard to double back and not do it. Because a lot of brokers I work with, they see significant, and I mean significant, increases in what they earn because protection is very lucrative. In fact, I've got one guy and he was earning so much additional revenue from the protection that to avoid the whole even concern around clawback, he's just putting it all on the drip. That is a genuinely sustainable thing to do if you're just literally doubling or trebling your income, and then you can build up these nice protected income sources, passive income sources that you can rely on. And I just think this is.
We had this conversation the other day about the drip. The drip's amazing, right? For if you've got deep pockets or if it's not your major income, but it's perfect, isn't it? If you can bang out 4 years of quality advice, then you've all of a sudden got this amazing Well, it's salary, isn't it? Salary on top of your salary.
What you can do is, for example, like, if you learn how to increase your protection sales significantly. So, for example, all your mortgage cover, all your other ones, all the things are givens, you can just put them into into your normal indemnity commission model, and all the big ticket stuff you can just kind of park into the non-indemnity. You can have it on the drip, and that way you've got these two different running sources. Because a lot of people, I recognise what you're saying, but like, it's almost impossible to go off the drug cold turkey straight into a non-indemnity model. It's like almost impossible because you're so used to earning so much. But I think the key there is drip feed it in. Either do it and agree certain parts. There's different ways of doing it, but some advisors I coach to say, well, look, once you hit a certain premium threshold each month, put the rest on the drip,
50-50,
or segment your products and go, well, look, we've got higher risk ones, higher premium ones, and lower risk ones, which we know are good, and just play them off against each other. So you've got a bit of short-term cash coming in, and then you've got the longer-term stuff that's just sitting there dripping in. And it's just, there's different ways of doing it, but I just think brokers need to.
Like you say, it's very hard to go. It's very hard to look at that long term once you've been getting the full whack all the time.
But you won't believe how much more you'll make in the long run, because you normally get 25 to 40% uplift on the non-indemnity. Yeah. So it's not even that you're getting the same, you're getting more even. So this guy, we looked at what he will get, and yes, okay, I appreciate the first year and second year are a bit like, okay, you could be making significantly more in the short term, but you look at year 3 and 4, and by year 4, you're looking at significant amounts of money every month to the point where the guy wouldn't need to work again. Yeah, absolutely. It builds and builds.
That's constant. So do you advise people on that as well when they're looking at their models?
Absolutely. So so the coaching business is kind of like the primary thing, isn't it? Because most of them just need support. And I was working initially with one-to-one advisors, right? And then I just got so busy that I realized it wasn't, in the nicest possible way, it wasn't the best use of my time, because I knew I could have a bigger impact dealing with the large organizations, with the larger firms. So I've got some incredibly large contracts now, and some very, very big firms, probably the biggest in Britain, including one of the big 4 banks. So I'm working with all these big organizations. Say again?
I said who?
It's Lloyd's Banking Group. I'm happy to say that because I'm starting with, I've started with them. So working with Lloyd's Banking Group, who've got Scottish Widows products, I'm helping them and their branch staff to kind of really have more meaningful protection conversations, which is brilliant. And then there's all these kind of large organizations that I'm working with, including wealth firms as well. But I think what's wonderful is that's helped me, in theory, help an awful lot more customers out there to be protected, help a lot more advisors. But in the background, I'm working on a training program for individual advisors who aren't part of that big group, because I feel really guilty and really bad that they're not getting access to this stuff. So I'm working on
everyone all the time. Can you physically?
It's impossible, isn't it? It's impossible.
There's a finite amount of hours. You can't even if you charge people double, it doesn't matter because the hours you can't get back.
It's not even about the money, is it? It's more that, generally there are only so many hours in the day, and you've got these things to do. So I've decided to do this training program mainly because I really want to help lots of advisors go out and have these more meaningful conversations. It's going to be completely free to access.
Sorry, Matt. Is that going to be like an online platform type situation?
Yeah, all online. So it'll be me talking. So it's all pre-recorded modules, updated all the time. We're adding new modules in all the time. So it's Ash who's helping me develop it at the minute. That's going to be launching this month, ironically, this month. So that's going to, and the only reason I'm saying, I'm not trying to plug it because it's free. I don't really own anything off it, but it's more just letting advisors know that these resources are going to be there. And it's because it's missing from the industry, right? So
did you say
I'm
free?
doing it. Yeah, completely free. Completely free to use.
You're missing a trick there, Matt. Don't make any money.
No, not at all, mate. Listen, genuinely, I'm doing perfectly well with the other ones I've got, thanks. No, generally, without sounding very cliche, it's just, mate, I have a calling in life.
It's a great thing you're doing.
No, I get what you're saying. Don't get me wrong. I have thought about it, right? But genuinely, I have like a bit of a calling in life. I think I've been given an amazing opportunity to make a difference, and the difference I want to make in life is just helping more people to get access to the right protection solutions. If I can help advisors do it and do it in a meaningful way, and it can make a difference, brilliant. It doesn't matter to me. I'm doing fine. I'm doing all right.
Yeah.
I just want to make sure more advisors can have it, and I feel very bad that I can't help everyone. And so the purpose of doing this is just to try and raise standards in the industry and normalize these protection conversations.
So that is incredible, and genuinely, like, you can tell when you talk to you, like, there's no bullshit. You love it, but that's why you get those big jobs as well, right? That's why you can charge the big bucks to the big boys, because you get it. You get like this is. Are you giving that away for free because you really want the industry to be better?
100%, mate. I think it's going to help everyone. It will help everyone. everyone. Like I said, rising tide raises all ships, doesn't it, mate? If all the smaller advisors get really good at having it, it makes it very easy for everyone. Because imagine it this way: it becomes an expectation, a normalization that when you go and see a mortgage advisor, it's part of the conversation.
It's normalizing excellence. We say the same with recruitment when people say, who are your big competitors? And I say, really, our big competitors are shit recruiters doing things wrong that ruin it for everyone else, because then everyone has
Ruin
this
the
perception
market,
of recruitment.
give you a bad reputation.
Like
Absolutely.
Exactly, yeah. So actually, I love a good bit of competition, because everyone goes, oh, okay, that's just a standard. We pay recruiters because they're good. Not, oh, some are good, some are shit, and then you hear all the horror stories. So I have no problem with someone upping the standard of my market, because it just makes it so much easier for me to go in and understand 100%. It.
Of course it does, mate.
It makes
Brilliant.
sense.
That's a great attitude to have, mate. That's a really good attitude to have. I love it. Absolutely. I was going to say to you very quickly, I've got this little tip out there for advisors. So rather than getting into all the realms and the complexities of how to go and do this, here's a very sustainable practice that advisors can use that are listening, if that's all right, if you don't mind me giving them a little tip, that they can use instantly. And this could potentially help them double their life insurance premiums and penetration immediately, right? So if you think for a minute why someone takes mortgage life insurance, because most mortgage brokers will comfortably sell mortgage life insurance because it's very easy off the back of the debt, and ultimately it's the path of least resistance for the customer, right? So when you're doing that, let's just think about for a second why someone takes mortgage life insurance. And it's not to pay the bank back. No one really cares about paying the bank back, quite frankly. It's about making sure the family can stay in the home. That's the key crux, right? But the truth of it is, there's no guarantee of that happening just because you pay the mortgage off, because there's going to be all these additional bills that are no longer being paid by the person who's just passed away. So there is your instant chance to go, right, so my assumption is you want to make sure the family can stay in the home. Yes. Well, in that case, what we're going to do is put a plan in place that's going to clear the mortgage debt, because that's going to be your biggest liability. And then another plan in place to make sure you've got some additional income coming every month so those bills can still be paid. And that's how we guarantee you can stay in the home. Now that's fib, right? Instant. Instant. You will get no pushback from the customer, no resistance whatsoever. Both those recommendations are built around the client's objective, and you'll have no problem doing that. And I'll tell you what, all the brokers listening who do mortgage life insurance will just double their sales immediately by doing that. It's ridiculous.
That's amazing. Yeah. And it makes complete sense. You're giving them something they need, right?
And you're going to produce the right outcome.
This keeps the client happy, yeah. And God forbid they have to use it. It's there for a reason, right?
100%, mate. 100%. Cool.
That's good. I genuinely love having the conversation with you. I could talk to you about it all day, but we'll end up boring people about life insurance in the end. You're very articulate in the way you talk about it, and it has changed even my perception. I've been around mortgages 15, 16, 17 years. And like I've always said, I always make a joke about wedding photographer, funeral director type stuff. But actually, that's bullshit, isn't it? You just need to. It's just getting the right mindset about it. And I've got it because I think it's really important. But then you kind of still, and I do get it because I speak to brokers every day. So I'm an echo chamber of the mortgage world.
Of course.
In that we haven't got the time. It's too hard. When you talk about it. But actually, if you're selling it right, it's just fucking part of the. Excuse me, but just part of the process.
Yeah, exactly, mate. You're spot on. And it's not hard. And if anyone's finding it difficult, literally just come onto my social feeds. I'll put loads of tips on there on how to do it, how to engage your customers, what to say, when to say it, tips like I've just given you. So by all means, just get them to just signpost that, and they can more than happily do it. No expectation or anything. It's just if it helps them have a conversation, I'm more than happy with that. And I think, do you know what, mate? Honestly, the most flattering thing for me isn't when you get younger advisors going, oh, that's really cool. That's really cool. That's lovely. But it's almost like a bit of a given. The bit that I love is when you meet people either like yourself who've been in the industry for 15, 20 years, or those brokers have been doing it for 30 years and they go, wow, I've learned something from you today. And you go, oh, that is such a powerful moment, because you kind of go, don't be wrong. It's not being rude or insulting in anything. It's actually just this idea that you could penetrate someone who's done something so long and has all that kind of like built up thought processes, and that for me is very powerful. I actually love that more than anything in the world. That's the thing. It's like the drug. That's the addiction for me. It's like, if I can get someone to think differently about this, I've kind of won.
You know what? I know this isn't about life insurance, but I would love to delve into your why, because I think it's very similar to mine. You're obviously very good at your job, but there's so much more. I won't go into it now, but it's super interesting as to I'm the same. If you have that, like someone who you're working with and they become a trusted partner and they get something from you, that feeling is, I'd say better than I don't get paid for it, but you know what I mean. It's
priceless.
incredible.
Priceless.
Yeah, no, I'm with you. So again, I said I only keep you half an hour, but I really appreciate. I talk to you all day. But if people want to get hold of you, Matt, obviously all your socials will be on our socials. But what's the best way for someone to contact you? Obviously, busy man. Now you're killing the corporate world.
Yeah, thank you, mate. Best thing to do is probably just reach out through socials, either through LinkedIn or Instagram. Just drop me a DM, and I'll be happy to get back to anyone. Yeah, if anyone needs any help or
Cool.
tips on
And
anything.
I would like to plug that the new platform that you're putting out there, because I think you're doing amazing things for the industry, and I think that's
Thanks,
deserves
mate.
to be
Appreciate
deserves
that.
to be plugged.
Thank you.
Good. So it was great to see you, and hopefully, thank you for everyone listening and watching. I genuinely hope people got something from it. I have talked about life insurance a few times on here. I don't think we've ever really got to the crux of it like we have today. I think it's a super important one. So, like I said, I'll push it as much as possible. But appreciate your time, Matt, and I'll catch up with you soon.
Thank you very much for having me. Appreciate it.